Good morning. It's Market Day Report. We're so glad you're with us to start another trading week. First full trading week of the month of March. Now, we do have some outside news that could affect the markets, and primarily looking at what might happen to the energy markets this morning, but a little more on that in a moment. First off, overnight action in the corn market, lower across the board. The December contract is new crop 447 3/4, down 2.5, and this was after a higher settlement on Friday. Now, the old crop did settle in the red on Friday, but the new crop was higher. What about soybeans? Beans were higher on Friday, but lower in the overnight session, down 3, 1027.5. Wheat market higher in all three exchanges on Friday, but losses for Chicago overnight, 539 3/4. That's off 3 1/4. For hard red, July down 5.5, 535 3/4. And spring wheat December contract, 640 3/4, penny and a half higher. What about the cotton market? Well, cotton in New York was higher, breaking a 5-day losing streak on Friday. And December, overnight, 69.96, up 25 points. Let's go to Missouri. President, Midwest Market Solutions, is Brian Hoops. Let's start with the row crops and how we start trading this week.
Hey, good morning, Tony. Yeah, we are seeing a little weakness here overnight, especially in the old crop corn where we've taken out last week's lows. And trade, I think, disappointed with that, that we're seeing that. And we saw a lot of bear spreading to end the week, despite last week where we saw 2 private sales of old crop corn, that new crop under a lot of pressure by Friday and followed through in the overnight. Of course, soybeans, I think in the grains over in general, we're disappointed that President Trump had said he's not planning on meeting with President Xi from China this week. They've already met, and he doesn't have plans to speak with them again. That disappointment spilled over into the grains last night. Now, soybeans probably seem to be hit hardest by the news, but they also have a very slow harvest pace in Argentina. It came out over the weekend that Argentina's soybean harvest about half of what they should be. It should be about 50% done. They're only 25% harvested. And so we're seeing a little support in the old crop beans, soybean meal as a result of that. But crude oil down sharply overnight. OPEC has decided they would bump up their production starting in June, over a 400,000 barrel increase. And it's going to keep pressure on that crude oil market, I'm afraid, as our administration here wants to increase crude oil production as well. That's going to put more pressure, more supply on the market to deal with. So yeah, a lot of choppiness here. It seems like in these marketplace, not a lot of clear direction. We had a couple-day rally in the wheat market, but just we're going to have a tough time sustaining that with crop progress this afternoon showing a likely increase of 1 to 2% in the winter wheat conditions. Corn planting pace probably close to 45% done. Soybeans 30 to 35% done. It's a pretty much a normal pace. I wouldn't say extremely fast, but in line with where we should be to grow at least an average crop this year.
Yeah, I'm glad you mentioned the crude oil there, with OPEC Plus deciding to increase their production. You know, you look back at what happened in April, and we saw the steepest decline in that OPEC market, largest monthly loss since 2021. So, I mean, we're really pulling that thing back, aren't we?
Yeah, exactly. It's probably going to continue. You know, it's going to be tough to push this a lot higher, especially we're in a war with China, and they are a big buyer of U.S. ethanol. They're a big buyer of U.S. crude oil products as well. And if we're in a trade war with them, it's going to limit our ability to export a lot of the product. At the same time, we're producing more oil than we ever have in the past.
All right, Brian, hang on. We'll take a break, come back, and we'll look at livestock markets next. Market Day Report continues in a moment. Cash prices were higher last week. The question is, what will packers do this week? Will they have to pay up to get more cattle? Do they still have cattle they didn't harvest? Lots of questions as we work our way through this week. Live cattle futures on Friday did finish higher, with the June contract at 211.10, up a buck 45, 212 higher on the August. Let's bring back in Brian Hoops, Midwest Market Solutions. Well, where do we go this week?
Yeah, calls for the cash markets are higher once again. Asking prices are going to be another $2-3 better than what we saw for last week's trade. And last week's trade was very strong. We continue to push the cash markets higher. Packers slowing their kill speeds. We're about, what I think, 46,000 head less than last year we killed last week. So we're slowing that pace down, but yet the cutout values, they are responding. They were up over $9 in the choice, almost $8 higher select last week. But yet our Packer profit margins continue to shrink. They went from about $75 in the red to now $150 in the red, estimated this morning. And that's because they're paying higher in this cash market. They just seem to continue to buy these cattle. There's a strong demand base for the cattle. The question is, at what price level does the consumer start to back away? And does the Packer see a reduction in their slaughter enough that they don't have to pay up for the cash markets? That's a tough answer because nobody knows. We're continuing to hit new contract highs, which is a bull market. If you're a producer, there's risk here for you, a lot of risk. We have a major correction. Time to get some options in place or get at least a minimum price floor established so that these higher price levels don't slip away, because they could at any time. We could see a $10-15 correction, which in fact would bring back more speculative buying back into the marketplace, I think.
All right, Brian, thanks for popping in today. And by the way, happy uno, dos, tres, cuatro, Cinco de Mayo. Happy Cinco de Mayo. Brian Hoops is with Midwest Market Solutions.